so I'm going to tell you a little story. I'm not going to say who it is. I'm just going to say that someone I know really well is in the process of starting a business. And of course, the first step has been got to get the finances in order, have to set up, the corporate accounts and all of that and get everything wired together. Well, funding those accounts has been something that's been super interesting to observe just in the wild. Getting the operating funds from other sources. And in some cases, there were constraints, right? Where I needed these funds right away because maybe I have to pay for certain things because, we're getting an office lease together, et cetera, and they're expecting the funds right away. And we need to do it either through like a debit card or whatever it might be. And so I'm watching all of this play out. And in the back of my mind, obviously, I have the consumer mindset of, what do you mean? I mean, if I need to move money from here to there, I can do it right now on my iPhone. I can just put some money on my Apple Card and just deliver it to you instantly, and you just have it. How is it the case that I can't just put money into any bank account instantaneously? Well, it turns out that that's not the case. It turns out that when you're dealing in the corporate space, it's not just the fact that the bank websites themselves don't support all of these technologies that you would expect from a consumer perspective, like instant transfers. That's not a thing. You can't use it, especially if you have a new account. That's the other kind of thing that's interesting here is that you want to get up and running. You want to start making moves. Well, you're going to have to wait at least a week to get funds moved around. Yes, you could wire, but even in the case of wire, let's say that you're doing it on a Saturday. Well, you're not going to get your funds right away. You're going to have to wait until at least Monday, maybe. So it's this whole thing that I don't think many people realize that even though on the consumer side of the house, there's been massive transformation. You've got PayPal, you've got Zelle, you've got, Square Cash, you've got Apple. All of them have their own version and implementation of real-time or instant funds transfers. But that's just not the case, at least we think, on the corporate side. And I think what was floating around my mind, and, of course, I didn't even kick off the podcast yet. Welcome to Fintech Corner. I'm Joseph Drambarean. I'm your host, and I'm joined by Brett Turner, our founder and CEO here at Trovata. And today, we're going to wade into the murky waters of payments, especially on the corporate side. And I think we want to demystify a little bit about what has been happening within corporate payments and framing it with these expectations that we should have, right? We've gotten used to a better payment ecosystem on the consumer side. Why can't that be the case on the corporate side? And it turns out it can be. And so I wanted to start with just this prompt. Is it as bad as I think it is on the corporate side? And is it a simple yes or no? Well, I'm just curious what your take is on that right away.
First of all, you said a friend who's setting up a business. Like usually when you say that, it's like, is that actually you? And you're developing a side hustle? You need to tell me about something.
It's not me. It's not me.
No, I mean the crazy thing is when you think of like sending, Venmoing $25, it's just very different when you have this thing that's got to go through a controller and internal controls and how it's going to translate to all the corporate policy and governance that needs to happen. So you've got all those things that just need to happen. It's a whole different world, of course. So, and then you've got, really the banks that are sort of split into, retail, which is small business consumer, anything that's, above maybe 10, 20 million in revenue. It's more on the wholesale side of the bank. You're talking, banks are still, built on mainframe computing or run on mainframe computing. So you're talking about two separate different mainframes essentially. And so, yeah, it is crazy that these two worlds are becoming so different. And then we all live in it and experience, it just feels like a different planet. Why do I have to go to, I'm living on, on planet Earth and it's feeling, more modern. Why do I have to go to, Mercury or Venus to kind of do my corporate business? But it is changing. Some of the cool stuff that's now, we get to see that. We get to see that because we're really bringing in the modern into this whole world. And what you kind of see in consumer, it starts to make its way into corporate. like we're at the forefront of pioneering APIs with banks, and it's all kind of starting to happen on the payment side, and so the wave is coming. It's definitely coming, and a lot of people I don't think have any clue on how disruptive that's going to be.
It's interesting because I see some analogies between how peer-to-peer payments helped evolve everything on the consumer side. So if you rewind the tape and you go back to the Stone Age of peer-to-peer payments and you think of Venmo and PayPal, that really drove a lot of behavior change with the banks because they had to react. They had to introduce their own technology, Zelle, to introduce peer-to-peer payments. And that transformed a lot of things. They kind of pushed, for example, the clearinghouse to support same-day ACH transfers and almost create these new technologies to support it. And it was because PayPal and Venmo were doing something that was crazy. They were willing to kind of take the burden and the risk of moving money instantaneously for their end users so that their end users could have a great experience. It seems like the same thing has been happening on the corporate side where there's this whole other ecosystem outside of the banks, not the banks, that came into play. So you mentioned Bill.com as just one example. They're not the only ones. There's a bunch of players that almost sit in between the bank and the customer. And the customer, all that they want to do is make a payment, right? They want to make a transfer of some kind, pay an invoice, to pay a vendor, whatever it might be, to receive, a payment, whatever it might be. And I'm sure that they wish that that could just be done natively, that they could just request that payment and get it, and it be put into their accounts. The problem, though, is that there's a level of controls, which you just mentioned, that is kind of inherently tied to this whole process. And that has to be a check in the box, that you have to be able to initiate these transfers and be able to validate and audit and control when and why payments happen. Okay, that makes sense. That's a software problem, though, right? Anyone should be able to solve that problem through a great user experience. The second part of this problem, though, is that once that's done, you would assume, okay, now give me my money, or now let me send you my money. The problem is that even that is fragmented. There are many ways that you could do it. You could do it via the traditional ACH route, right? 1 to 3 days, and that is based on a technology that is super old at this, we're talking about multiple decades worth of experience on those rails, and not much has changed other than maybe just recently this concept of instant ACH, but it's more consumer than it is corporate, I'd say. Then we have Wire, which has existed forever, right? Not much has changed on that front. And then we have new things, RTP, Fed getting in the game and kind of introducing their own payments program. In Europe, they have their own kind of systems through PSD2. All around the world, there are all of these different programs that are kind of bringing to the forefront, it's possible to do instant. You don't need to be PayPal to have that kind of technology. We've come up with it.
Well, there's some of it is just even the personas that you're dealing with too, because you've got essentially two institutions and then this gap that's widening. Right. And so, and the widening is caused by digitization. So you basically have the banks and then you have ERP systems, right? And that gap exists between the two, and that is growing because the new emergent aspect of kind of what's driving in that wedge to make that gap even wider is really what's happened with e-commerce over the last 15, 20 years. E-commerce is really, you talk about like payments are getting into everything. Every business is turning into a payments company, and maybe not really. But the fact is, business is done digitally so much now, and with the rise of e-commerce and what that's done is it's sort of brought this need for this operational money movement aspect that needs to be programmatic. So you've got the aspects of like treasury that really needs to move money to make sure from a liquidity standpoint, it's almost like a load balancing. We need to make sure money is there when we need it, that it's happening correctly. It's happening in, from a corporate governance or with statutory reasons because they're doing business in different countries. And, all of those things are there for a reason. The AP team is all the money movement for vendors. We got to pay our bills. We got to pay our suppliers. And there's a whole different reason of governance around that. Like, are we paying the right bills? Are we paying too much money? Do we need to, look at a different vendor because, this is an inefficient way of how we're spending our money. So you've got these business reasons and this other very tactical reasons, all kind of around liquidity. And then this whole emergent operational means that needs to be programmatic of moving money. And so all of that is causing this gap to widen. And then over the last, 15, 20 years, it's, of course, like all of that necessity is the mother of invention, right? So the gap is getting filled. And there's companies that are making a really good living off of that because that gap needs to close with experience, with different, automated means, or just taking care of some of that heavy lift. And therefore, you got this massive ecosystem that's grown up now. So if you think about that ecosystem, it's been, in a lot of ways, it's been doing things because if the banks were tech companies, they would be doing that. They're not. And so it's sort of eating out of the bank's bowl from a transactional payment standpoint. And that's been kind of happening sort of, it's like a leaky bucket. It's just been flowing out for a long time. And the banks have kind of made peace with that. And all these companies now that's earning a living on the payment stack of transactional stack of revenue that normally used to always be for the bank. And now it's shared. And there's now a wholesale stack. So, but now that all of those companies have been doing that to the bank, and now you have this thing called APIs and the bank's payment rails that are being now accessible. And now the game can change materially. And that's kind of what we're right on the cusp of.
It's really weird because you don't really think of kind of the banks playing a role in digital transformation, at least the traditional role that we've seen. And just for some context, I mean, when we think of digital transformation, we think of cloud. What happened, right, over the last 10 years where players like Amazon and Google and Microsoft came in and they said, hey, guess what? We could do data centers way more efficiently and effectively than you could ever dream of doing. And so put all of your eggs in our basket and we will keep it secure, we will keep it performant, and we will keep it bleeding edge. We'll give you the best of the world when it comes to compute and technology. And all you have to do is just keep giving us your credit card and you'll have the best of it, right? Take that as the context from almost like a business operations perspective. Let me just throw some examples at you because there's some truth to what you said just a few moments ago. While not every single business could call itself a payment company, if you will, every single business deals with the art of money movement in some way, shape, or form. And most businesses are being forced to accommodate automation on the payment front. So let me just hit you with some examples. Let's say that I'm a t-shirt maker in LA, and I'm just trying to set up an Instagram business where I sell my t-shirts on Instagram, and the way that it works is I create viral posts, people see it, they click on my link, they see the t-shirt, they click to buy it. It has to get basically outsourced to one of my partners. They make it on demand, they then ship it. They take money out of my account to cover the cost of that t-shirt. They do it incrementally for every single t-shirt because they're not going to take the risk of doing that t-shirt for me, right? This is all an on-demand business. And let's say that, 1 week I put together a social media post that did okay, but then the next week it goes viral. It gets picked up by someone crazy. Justin Bieber finds my t-shirt and decides to wear it and does a post about it, and it gets like 30 million views, okay? And then that business all of a sudden experiences scale issues where hundreds of thousands of people put in an order. My vendor then says, hey, in order to keep up with those orders, we're going to need to start drawing from your account more aggressively because we're not going to buy tens of thousands of t-shirts to fulfill these orders and carry all that risk. We're going to need to draw money from your account automatically. Well, in the past, what would have happened, right? You would have had to sit there and move funds. What if you don't have money in that account? You have to move funds from another account to supplement it, right? You have to find the money somehow. Maybe you have to draw some debt down, move that debt into that account so that the vendor can pull it in, right? But what's happening is take that same use case and play it out to like Facebook. Facebook does this, right? They build tools that enable creators. Those creators then get payouts based on incremental things that they do. They drive views, they drive, all kinds of viral behavior. And then Facebook pays you out based on that. And they do it precisely based on the things that have happened from an analytics perspective. Well, there's not a person at Facebook that sits and looks at spreadsheets all day and says, well, looks like you did 10,000 impressions. So according to my math, I'm now going to transfer, $400 into your bank account to cover those. No, it's all happening automatically. Mm-hmm. And so the only way to accomplish that kind of scale, both from like an individual doing a t-shirt business all the way up to Facebook, is the same technology. It's APIs, right? It's these building blocks that allow for you to implement an automation to say, if this case, transfer money programmatically from this account, and it has to be instant. It has to be right when I need it, right?
Yep.
So that's pretty transformative, right? Because the way that we were doing it before is we had people every step of the chain. They'd review what happened, the analytics, right? They then would have to book it into the ERP system. They'd have to approve it. Then a person would have to go take that, move the money, confirm that it happened. Then the vendor got it. Then they do their thing. And it could have been 5 to 10 days, maybe longer in between. Yeah.
It's a process.
And that does not work. That does not work.
As businesses are scaling, you have to do it. It's all in batch mode, right? You have to do it, payment runs. Back in the day, I'm aging myself, gray hair. When I was starting out, was a controller. I mean, you're signing checks. You could still, then you release checks. They get, you're paying your bills all more manually off of invoices. You're mailing checks out in the mail. And it's there's a lot that's kind of come from, some automation around that, but it's still a payment run. It's still a batch mode.
Right.
And at the end of the day, there's still a payment file that has to get integrated with the bank, and the bank to do there's a heavy implementation there in processing this batch file.
Right.
And all of that now is just ripe for disruption. At the end of the day, when you now look at the banks having APIs and, everything is processed as an individual payment. So you can it used to be you're passing files because you couldn't send a million transactions and that kind of volume because it's an IT problem then, right?
Right.
Congestion, sending all that through the internet, it just would be an issue. So you send it in a file. It's more efficient to pass a file. You have, SFTP, pass the file, take the file, unpack it, process it. So now though, when you look at the speed and the automation that you could do, the problem with passing and processing a file is now you have a lot of reconciliation issues because, if a payment falls out of the batch, it might hold up the entire batch, and then there's a fire drill for this is happening today. Like there's big companies will process, let's say it's going to be 1,000 payments or 10,000 payments, and the files will get held up because there's something wrong with down the line that happened on that individual payment. So when you look at now, process everything out at fast speeds, but it can be done all programmatically and then individually. Now you don't have to worry about reconciliation. You've minimized the risk for processing. And now if one payment falls out, now it's not going to hold up the batch. So the things that can now happen where the API is starting to innovate and starting to open up things that how it can be done. I mean, this old archaic IT send a file and that's so 20, 25 years old. We're just now opening that up where now you could process directly through the bank's payment rails. That's why when you look at this massive ecosystem that's just blown up in 15, 20 years, largely because of the lack of innovation and the clunkiness of the handoff between the two institutions really of ERP and banks, that's now widening, and everybody's having to do, less or more with less, and have to do it with greater precision. All of that is coming down now to need for automation. All that's grown. So in some ways, as that ecosystem has blown up and really affected the bank, it's sort of shifted the gravitas a little bit from the bank on payments over to the ecosystem. And all those companies we can name a lot that have done pretty darn well. Now it's like the banks, has this massive weapon, which is really the API, where they can actually start to close that gap. There still needs to be an intermediary point, but it's much thinner. And it's more about the processing of that, solving that from an IT, the constraints there, adding some experience, but nobody's really building it to it because all the saturated ecosystem that exists today, it's like in some ways they'll kind of cannibalize their revenue if they start to leap right into that mode. So I think that's one of the exciting things now when you can get just better, faster, cheaper, all of the things that you can get out of this that are just so game changing and coming, and how that's going to affect this ecosystem that needed to be there and made a good living over the last 15, 20 years. But there's this massive transformation that's about ready to take place, and how that group is really going to fit into that. There's a lot of question marks.
So that's interesting. This just occurred to me. You mentioned something that kind of stopped me in my tracks. It's not just about the speed of the payments. It's about how the whole end-to-end life cycle is delivered. Because let's put speed aside just for a second. We could stay on the old school, right, of 1 to 3 days. The problem is, even if you wanted to do it that way, you've always had to deal with an intermediary of some kind. You can't just go to the bank if you wanted to. Well, I guess you could, but it would be a very manual, very one-off type process. But let's say you wanted to do a bunch of work, right? From your ERP, you want to deliver a bunch of payments, or you wanted to have some sort of delivery system. Well, these providers, the middleware we were talking about before, the Bill.coms, they're sitting in between for a reason. It's not just their user experience. That's a part of it.
Yep.
But they're actually facilitating the money transfer, right? So they are the ones that are delivering those funds to the bank and making sure that it completes and whatever it is that they do from a fraud prevention. So they're packaging that up
like a digital post office. You know what I mean? They've got to do some of that routing that you don't want to do. Back in the day, there still had to be somebody in the mail room has to mail out all the checks with all the payments. The checks had to get stuffed in all the envelopes, and somebody's got to mail that out in the mail room. They're kind of had it. It's a little bit like an automated rail room. They're handling all of that, doing all that stuff that nobody wants to do. And when you have to go to point A to point B, from ERP to bank, there's a pretty congested process. So they fill that gap and they do that for a fee.
So what's happening though here is that they're being disintermediated because they kind of don't need to be there anymore. We can just go directly to the bank. We can connect with their services, and not just that, we can also itemize our use of their services. Instead of having to collect it, wrap it up in a basket, and put a bow on top and say, hey, bank, here's 1,000 transactions that I would like to do. Now you could just say, no, I have this one. Take care of it, please. And now I have another one. And I have another one. And I have another one. And it can be happening programmatically, as you're saying, where it's not even a person doing that. It's just happening as it's needed. And it's also happening in a way where it reflects the closing of the books automatically, because it knows I have this entry over here and I have this transaction over here that covers that entry. So when I see it in the bank statement, it's done. That's it. Case closed. I have seen it settled.
There's no reconciliation. Reconciliation sort of goes away when you can process everything. When everything has an independent ID on one end, an independent ID from how it's processed by the bank on the other end, then matching up, unique ID, it's pretty easy then. You don't really have to reconcile much. You don't have a lot of fallout. You don't have stuff that because you're not dealing with these clunky files and then having to reconcile, did it happen? Did it not? What payments didn't make it? So, and I think when you look at that, like, yes, there still needs to be experience. So it's not, but the thing about the payment ecosystem is it's almost like there's a bit of doing some of the bank's job. It's almost like most companies will have an intermediary bank.
Right.
And the intermediary bank, essentially, it's what's been going on from the days of even ADP, when you process payroll, all the money comes out of your account in bulk, and then all of the downstream recipients to receive all those funds in those payments will get those from the intermediate bank, maybe the bank that ADP is using, for instance, to process.
Right.
And then everybody's getting their direct deposit. So now that whole intermediary bank and intermediary process, that banking portion of it now can basically be collapsed. You basically have a means, because you can go directly to the bank, companies can initiate the file as payments to go directly through the payment rails, their bank payment rails, and then their bank then is initiating those transfers individually to the recipients directly. There's no intermediate bank. There's no managing float and all that stuff. That's all kind of nonsense and going to go away. Like now that all of a sudden that void, is kind of starting to be able to kind of get squeezed and brought together. And the way to close that gap is just so much easier than it used to be. And it's more of a tech and experience issue than it is like we have to kind of help the bank do its job. That now is going away.
I think the other piece here that's missing that we should probably talk about is there's a chain of trust issue that has been solved through this entire ecosystem. Because of course, the reason for having the clearinghouse and all of these players in between in the past was because you didn't know whether or not the funds that were being transferred or the attempted transfer would actually clear. And there was no technological way to know, within seconds if that would happen, which is why it would have to enter this kind of, shadow portal, waiting to make sure, doing a bunch of checks, right? Fraud checks, a bunch of different human use cases to make sure that it could clear. Well, now the other big transformation that has taken place, especially with RTP, but technologies, like FedNow and others, is that they're checking right away, right? There's a chain of trust that is being completed bank to bank that's in network that says within seconds, yep, these funds are available in this DDA account that I'm trying to transfer from. Make it so. Yep. And it is immediately transferred. So that almost sounds very crypto-like, from that side of the world. And I don't want to spiral into crypto, but
honestly, I think quick interrupt on that. I think it is inspired a lot by, I think, the benefits of crypto kind of pushing a lot of, folks out of their comfort zones a little bit, but it's sort of forced, like, if this is where it can go, this is one of the benefits it can yield. And so it sort of pushed in some of these other, more, regulated or institutionalized alternatives, though, to at least do some of those concepts. And I think that's where you got FedNow and some of that's coming to play now, which is good. So it, in some ways, it kind of served an innovation purpose and kind of drove that and pushed the industry where it needed to go.
Yeah, because at the end of the day, what we're saying is modern businesses need to operate on a real-time basis. It's not going to get any slower than this. We need to be able to move funds around. We need clarity and transparency that the funds that we are moving have settled. We need to be able to react based on those insights and make changes, for example, to our liquidity if certain conditions take place from our business perspective, from a market perspective. Those things should be happening on an automated basis, and it shouldn't be humans that are sitting down looking at reports trying to figure it all out. It should be done based on if this, then that programmatic technology. Because at the end of the day, how else could you possibly operate at scale if you didn't have that, right? And so,
and I think if you look at the, kind of here, hey, payments are, is kind of moving to, it's a race to the bottom. I mean, it's definitely going to decline, because the biggest driver there at the end of the day is there's still a lot of legacy infrastructure that's driving a lot of this stuff. And so when you have legacy infrastructure, you have legacy cost, and legacy cost plays into all those models. So if the whole payment revenue model, transaction revenue model is built on legacy infrastructure, legacy cost, then you're going to have higher prices. But as that starts to get innovated with the bank's payment rails directly, you think of even Trovata's model. Like we don't really have any implementation because we don't have to. We don't really have any implementation to do or things to do there. And therefore, since there's no cost, we don't charge customers implementation. I think in the same way, it's like because on modern infrastructure, the burden of cost is so low, you can now pass on that savings, have a lower cost, and then therefore pass on that savings to customers. And this is what they've been waiting for. And sort of, I think most customers, most, controllers or CFOs or treasurers, they look at this and it's like, yeah, they see what's happening in consumer and then they see what's happening on the corporate side. And it's like, and even the rates in which they're having to pay, like all that stuff is going to change massively. There's a step function coming. And when it does, the benefit because of the low tech burden is going to, translate into lower prices.
So I'm going to do something crazy here. This is unscripted. So we'll see how this plays out. I happen to know that we really believe in this here at Trovata. We think that this whole space should get totally transformed based on APIs, based on a great experience. I'm going to put you on the spot right now in front of our global audience. How would you feel? How would you feel about...
Well, maybe Justin Bieber's listening, so maybe that global audience is going to expand now, Justin, with the comment.
I hope Justin Bieber does not react to this statement because I don't think we're ready. Okay, let me ask you this. Would you be open to letting our audience experience payments as it should be for free?
Yes.
You're serious?
The beauty about this is that one of the things that as you know, what we've punched through is that we've been perfecting this low-cost infrastructure model. And I think when you kind of look at even folks in Treasury, they and all the TMS providers, they don't quite understand this. They talk about cloud as if they know. I just don't think they even understand actually what cloud even is. Because when you have all of this tech debt or all of this infrastructure maybe that you're hosting, and therefore you have a high cost you got to contend with. Well, because we've been, hard at, just perfecting our infrastructure model, our cost to deliver services is so low. So that's why we can deliver a freemium experience. So we can deliver a rapid boot up. There really isn't a lot that we have to do to kind of get you into the product, from implementation and just let you be able to sign up for free. Those things that we're doing. So yes, we want to add payments for free, which is crazy, which is unheard of. Now, how long we can do that, I don't know. But I think when we kind of look at the things that we can help the bank kind of be that bridge to their API, because I think the other thing that's getting missed is a lot of the existing ecosystem isn't really building to it, because they have more to lose than to gain, right? And then you don't have a lot of folks in the corporate space who understand corporate as well, so nobody's really building the APIs as much. And so we can do that, and because we have this really optimized infrastructure model, we're going to make payments with our freemium, sign up for free, we'll process transactions for free. Like you're not having to pay transaction fees. And now how long we'll be able to, keep that going? I mean, we definitely want to use that as an incentive to get people using this, because we now can be a bridge and let you experience all of the benefits, which there are many, to drive, that payment processing directly through your bank's payment rails and let that happen. And we're intentionally not being a payment provider. So if we had to be a payment provider and deal with bank regulation, of course, we would be doing it for free. But we don't have to do that. We're a tech provider. We can give you this great tech experience, handle the instructions from your ERP, particular NetSuite, and make that seamless and flow through to your bank and transact. Let the bank as the payment provider. We can facilitate that in a way we think is game changing, and we want everybody to experience it. It's going to be pretty cool.
Wow, I haven't seen you this fired up in a while, so this is awesome. So I guess, okay. So for those of you that are listening to our podcast, this is real. We'd love for you to try the Trovata payments experience. So if you bank with JP Morgan or with Wells Fargo or with Bank of America or Silicon Valley Bank or PNC, we would love for you to join our payments experience for free. We're not kidding. We would love for you to experience that. So you've heard it here first on the podcast. And I guess that's a pretty crazy way for us to end the show today. This has been awesome. There's just so much to dig into with payments, and this is probably the first of many conversations we're going to have on this front. But the point being, we really believe in this. We think that this is just the beginning of transforming this space. We want to have a strong voice in this marketplace, and we're putting our money where our mouth is, and we would love for you to experience it. So thank you again for joining us on Fintech Corner. Of course, my name is Joseph Drambarean. I'm your host. I've been joined by Brett Turner, our founder and CEO. Until next time, see you guys later.